네, 굿 모닝이에요, 여러분. 아침입니다. 아침과 저녁의 중간 사이 새벽 4시입니다. 네. 새벽 4시에는 특별한 에너지들이 있어요, 여러분. 이 달라요, 정말. 새벽 4시에서 한 6시, 5시 사이에는 이 지구에 특별한 에너지가 있습니다, 여러분. 자. 시원하다. 오늘 제 유튜브 구독자님 께서 발목과 무릎이 아파서 아무것도 못 하신다고 그렇게 말씀하셨는데 제가 알려드릴게요. 네. 저라면 이렇게 하겠습니다. 푸시업, 턱걸이, 그 다음 또 뭐 있어? 턱걸이, 숄더 프레스, 네, 케이블 푸시다운, 덤벨 컬. 발목 안 쓰거든요. 그거를 뭐 월수금으로 열심히 해요. 아셨죠? 굉장히 열심히 합니다. 그래서 일단 상체를 엄청나게 좋게 만들어요. 그리고 화목토로 해서 화목토로 해서 뭐 자전거 살살 세게 말고 살살 자전거 뭐 요가 네 그래서 살살 탑니다. 네. 그럼 그렇게 하겠어요. 네. 네. 그래서 상체 엄청나게 좋아지고 하신 분들은 그렇게 하시기 바랍니다. 아시죠? 네. 저는 오늘 네, 좋습니다. You are live 됐습니다. 네, 다시. 그래서 저는 오늘 운동 스케줄은 등과 삼두 네, 하도록 하겠습니다. 지금 여러분이 지금 몇 시냐면 4시. 잠깐만, 이거 알람 자꾸 나오는데 알람이. 오늘은 잠을 제가 오늘 4시 반에 일어나서 운동을 딱 5시부터 6시까지 딱 하려고 그랬는데 어저께 일찍 잤어요, 제가. 일찍 자서 오늘 일찍 일어났어요. 2시 50분 되니까 일어나지더라고요. 네. 평상시보다 너무 일찍 일어나서 아침에 이 대변을 보고 운동을 해야 되는데 네, 안 나왔습니다. 그래서 너무 일찍이라 원래 일어나면 바로 저는 이렇게 일어나서 제가 커피도 마시면서 아침에 저는 보통 한 1시간에서 1시간 30분 정도 공부를 하거든요. 커피 마시면서 서서. 그러면 이제 응가가 매려워요. 그래서 응가를 넣고 운동을 합니다. 그런데 지금 응가를 안 넣었어요. 그래서 모르겠어요. 좀 불편한 것 같아요. 일단 뭐 여러분, 모든 상황이 완벽할 수는 없어요. 그렇죠? 모든 상황이 완벽할 수는 없습니다. 완벽하지 않아도 그냥 그런 날도 있고 저런 날도 있는 거예요. 그래서 이런 날은 이런 식으로 하고 저런 날은 저런 식으로 하면.
I have to say that I'm a pediatric infectious disease physician, and we don't, this is not at all in my field of study, but I don't know whether that particular question has been looked at in terms of the vaccine studies.
Okay. 네. 여러분도 이렇게 되실 수 있어요. 네. 누구나 다 이렇게 될 수 있어요. 누구나 다 이렇게 될 수 있지만 누구나 하지 않는. 네. 이렇게 좀 오늘 돌아다니다가 여러분
안녕하세요.
운동을 하면 네, 응가가 나올 것 같습니다. 운동을 하다가 응가가 매려오면 응가를 넣도록 하겠습니다. 네. 자, 저희 목표는 시간이 없어서 못하시는 운동 못한다 하시는 분들께 제 영상을 선물로 드리는 거, 새벽 4시에도 운동할 수 있다는 거, 그리고 뭐 무릎 부상이든 뭐가 됐건 간에 하여튼 뭐가 돼서 뭘 못한다 하시는 분들께 저는 제 영상을 바칩니다. 바람이 휘날리며 봄바람이 휘날리며 바람이라 어? 인터넷 왜 이렇게 또 끊겨? 운동하다가 응가가 매려오면 응가를 넣을게요, 여러분. 네. 영어 공부 좀 합시다, 여러분. 우리 영어 공부. 자, 영어 공부. 전 영어를 잘하는 게 목표 중에 하나예요. 영어 잘하고 싶어요. 영어.
Abandon them. They don't show them where the trail is. They drop them off and they leave them, to think for themselves.
The message officials are trying to send to migrants right now is don't come here.
여러분 관심 분야의
Violence and poverty in much of
유튜브가
Central
됐건 뭐가 됐건 관심 분야를 보세요. 그럼 영어가 늘어요.
Antonia, thank you. The state of Georgia's sweeping election reform law criticized for
저 관심 분야는
votes there. Tonight,
운동,
other states are making moves to
운동, 여행,
a win for
그다음 영양, 건강, 그다음에 요새 저의 관심 분야는 돈 버는 거예요. 돈 버는 거. 그래서 이 경제 공부를 많이 하고 있어요. 돈 버는 거가 여러분 돈 버는 거 세상의 모든 게 어떻게 돌아가는지 알아야 돈을 벌어요. 그래서 여러분 관심 분야의 유튜브나 그거를 보세요. 그러면 여러분 영어가 잘 늘어요. 아, 영어 잘하고 싶어요. 영어를 잘하고 싶어요. 영어를 잘하고 싶습니다. 아, 영어를 잘하고 싶어요. 아침에 운동을 해야지.
Public funeral held today for Eric Talley, the Boulder, Colorado police officer killed in last week's mass shooting.
뉴스는 저는 관심이 없는데 저거는 지금 뉴스예요. 4시에는 5시부터 경제 그게 나와요.
Then officers carried his flag draped casket into Flatirons Community Church. About 20 minutes from where
그러면
the ultimate
CNBC 어저께 걸 유튜브로 봐야
was the
되겠다.
first officer on scene when the
CNBC
gunman
어저께.
opened fire inside of King Soopers.
Officer Talley believed in something so strongly, he was willing to die for it. Let's call it patriot.
뉴스는 저는 별로 관심이 없어요. 뉴스는 관심이 없습니다. 뉴스는. 아. 경제 뉴스만 관심 있어요. 네, 주식 경제. 뭐 미국 어떻게 됐고 어떻게 됐고 그런 거는 별로 관심이 없어요. 네. 뉴스를 멀리 하셔야 여러분. 이거 안 돼. CNBC 텔레비전. 자, CNBC 텔레비전 좋습니다. 그래서 동영상 어저께 언제부터 보면 되지? 어제 룰루라면 실적 발표. 자, 어떻게 됐냐 보자. 룰루라면 실적.
And the bottom line for Lululemon's fourth quarter, with revenues representing growth of 21% in North America, up 47% internationally. Total comps of 21%, direct to consumer, so that's mostly your online sales, up 94%, stores down 28%. So direct to consumer is now 52% of sales, at least for this past year. That's up from 29% the year prior to the pandemic. Gross margin increased, operating margin, however, did decrease. You can see shares here are just slightly positive and now they're slightly negative in reaction. When you look at the guidance for the first quarter, the EPS range is above what analysts had been expecting. However, the full year EPS range is below what analysts were expecting, while the revenue number is actually above. So a bit of a mixed bag when it comes to the guidance, particularly for that full year. But this quarter that just passed was a very strong one, and shares are now up 1.5%. Sarah, back over to you.
Shepard Smith here. Thanks for watching CNBC on YouTube.
Thanks for watching CNBC on YouTube.
You think that the underperformance in this crowded trade club will continue?
I actually think the term crowded trade can be extended well past the FANG and technology stocks. If you look at where fund flows have been, for the last several months, they've actually favored energy more than anything else. So, when I think of crowded trade, the tech stocks are unloved, including Microsoft. It's the cyclical stocks that I think if you want to make the argument that they're crowded, that's where they're crowded. Having said that, I'm really not worried about crowded or fund flows because at the end of the day, the fundamentals do support, and those fund flows across the board are being generated by easy money that's just not going to stop anytime soon.
Don't crowded trade, crowded trades, I understand what you're saying about energy, Jim, but crowded meaning that it's more than 10% long in the hedge fund community, that there's major positions in a lot of these stocks. Pete, doesn't that impact how these stocks trade and whether or not we see this underperformance? I mean, if you're an individual investor, you got these names, and they do extend well beyond the big cap tech stocks. Jefferies does include Activision Blizzard, Twilio, MasterCard, et cetera, et cetera. There's a long list of them, but shouldn't you be worried about how hedge funds move in and out, particularly around quarter ends?
and especially because of the fact that, Mel, we're always backwards looking when we're talking about these hedge funds and what their positions are, and maybe they're shifting around themselves. So, yeah.
사장님 안녕하세요.
Honestly, I still just go back to the fundamental story.
네, 잘 잤어요.
These various companies, and just look at it and try to make sense.
안녕하세요,
of whether or not,
회원님.
are they stretched? Are they not? I mean, one good example.
즐거운 하루 보내셨어요?
There are some names out there that, whether or not you want to put in the Pelotons, the DocuSigns, all the rest of those are the stocks that, and Josh was referencing this as well. Those are the stocks where we've seen a lot more of that pressure. We see these significant moves to the downside because they either had no PE or an extremely high PE. But I think you still have to look for quality. If you can find quality and it's trading at a reasonable PE level, I think that is the place to be. And whether or not the hedge funds are there with you or not, I don't get as concerned about it then, because I think the reality is too many people have been chasing. And they've been chasing that incredible run to the upside that they feel they're going to get out of the next stock that comes public and the next stock that everybody says is the stock to have. And yet, as we're coming out of the pandemic, to some degree at least, the vaccines continue to get out more and more. We are starting to see which are the quality names that are going to be able to continue forward, and which are the names that did extend way too far, that probably don't still have that upward movement potential that they once did, everybody thought they once did. So I think you've got to really shift around in a big way these days to find the correct quality names that still trade with a PE that makes sense.
This market, as Peter mentioned, throughout the pandemic has been a market of crowded trades working. If you weren't in the trades, that you were not performing or outperforming. But Josh, I feel like you've got a pearl of wisdom about
네,
how to-
그럭저럭이면 괜찮은 거예요. 그럭저럭한 날, 네, 그럭저럭한 날 기우면 잘 보낸 거예요.
There who makes money based on obsessing for what other people are doing. I just haven't met that person yet. But I'm only in this business since 1997, so it may just be that I haven't searched long enough and met enough traders. The reality is, if you focus on your investment strategy, whether it's dividend income or it's growth at a reasonable price, or it's diversified growth, or it's rebalancing. Like, if you focus more on getting that part right and having an appropriate asset allocation for the amount of risk you want to take, there will be stocks that you end up owning that are crowded. Like, it's unavoidable, especially if you own high quality companies. But in the end, things that are fads and they fade out and they fade back in, we've seen it over the years with solar, we've seen it with semiconductors, biotech. There's always going to be the in group of stocks, and then they'll go out and they'll come back again. It's really important that you not make buy and sell decisions, especially over the long term, based on that kind of thing. Now, if you're somebody that's writing an algorithm and you want to fade other people, that's like probably not most of our audience. So just like back to the Google example, over the last 10 years, if you just focused on the fact that Google is growing its revenue and earnings faster than the market and is not really outrageously expensive, you've turned $10,000 over the last 10 years into $70,000. That same $10,000 invested in the S&P 500 value ETF really only turned into $22,000. Both returns are fine. There's nothing wrong with doubling your money from 10 to 22, but 10 to 70 is better. All you had to do, though, was sit through these periods where people looked at Google and said it's crowded. If you could avoid that kind of stuff and just focus on why you bought it in the first place, I think you came out okay.
When I think about how low the boat is to the one side, how much leverage there might be, how little it took to break something, a fund this big.
It does, Jonathan. I mean, listen, there's no lack of news in the world today. We were dealing with Turkey last week. There's obviously the discussion around the deficit side. There's no lack of news, but one of the things that's really important is, we've gone through this period of incredible.
안녕하세요, 박정희님. 오늘 제가 좀 바빠서 일찍 시작했어요. 바빠서 운동 일찍 시작했어요. 네. 4시에 저도 별로 운동 안 하고 싶어요. 저는 오전에 한 6시 정도에 하고 싶은데 바빠서 이 시간대에 했어야 해서 제가 합니다. 이게 맨날 하고 싶을 때만 하겠어요.
Certainly looking at doing some of that, or did some of that on Friday as well.
How do you take advantage of that? What do you do?
So, there's some of these names that come under pressure. The market liquidity today is light, and particularly single name, particularly what we call front of the book liquidity. At any point in time when you're trying to execute out a price, liquidity across markets is it's not great. I mean, the uncertainty surrounding how's the economy going to grow, the vaccine developments, the size of the deficits, where's the Fed going. There's a lot of uncertainty. So the depth of the book liquidity is pretty light. So the ability to come in on some of these markets, there were some names that are tangential to what was happening here that came under pressure. And anyway, there was some pretty good buys that they made on Friday. So you try and take advantage of that, and then obviously got to keep an eye on it. There's more to come.
I can read between the lines that you did do some of that, Rick. You're basically telling me that. I understand you can't tell me which names you did that with. What I can lean on you though for a little bit more information is just how much cash, the cash allocation you would carry right now, just to have in store to take advantage of these kind of situations that maybe you're anticipating to happen again, maybe repeatedly through the year.
So John, I tell you, there's a balance that you have to strike between how much cash do you run and how do you generate return. We're running the highest level of cash we've run in years, maybe ever. And so, the idea being, when rates move higher, the pressure it puts on other asset classes and where the opportunity set is. So we're running a higher level of cash. That's not just take advantage of opportunities like this. I don't think we're done in terms of volatility of markets, given what liquidity is, given the uncertainty that's out there. So we're running a high level of cash in the portfolios. When you get some pressures like this, it's worth taking advantage of and try to put some of that money to work. But listen, I have to cite that I guess I don't know how many straight months we talked about, pretty bold up on the equity market and but I think there's some things to take note of. And I think these uncertainties, particularly around the Fed staying a long time, have taken some of the shine off of the equity market. So we've run down a bit of that data, and probably going to run that way for a bit of time.
Interesting, Rick. What did you pay down risk? What did you trim?
So, it's certainly equity beta. Certainly, the amount of equity exposure in a number of our funds, we brought depending on which funds, we took that down. And, I think the high yield market is also one that, quite frankly, is just not that interesting anymore. When you move the risk-free rate, not only do you move it higher, but when you get this volatility of the risk-free rate, you increase risk premium in a number of these asset classes. And quite frankly, it's been a pretty good run in places like high yield. And so we know we're paring back some of that, but we're still putting money to work. Maybe going up the credit quality spectrum in parts of the investor grade market are actually pretty interesting. So we're paring back some data, running more cash, and then taking a bit more of a cautious approach. By the way, this is also a seasonal period. As you get into April to July, if we don't talk about sell the bank, go away, there's some realistic dynamic around that. And it's just the liquidity's not as great during this period. There's not as much upside, I would argue. So anyway, we're going to run a little bit lower risk than we have.
Rick, away from the seasonal issues, what was it on the dashboard that started flashing just a little bit for you that said, now's the right time, this makes sense? Some kind of regime shift, something you think we're entering, something new that warranted this?
So it's a great question. So listen, I think the discussion from the Fed is I think there needs to be a plan. And I think the Fed needs to start but reducing the size of the quantitative easing program. And if they need, we think about the supply that's going to have to come to the market in 2022. They need to support long-end treasuries. So I think some form of twist, but a plan is going to be important. And then, you're seeing, as you say, I don't think people recognize this as much. We can keep rates here for so long. And you have to move off. If you don't move off of that, you think about what's happening in the stock market, what's happening in the financing markets. That gives you a bit of pause around, it's a little tougher to get, not more than a little tougher to get deals done. And then, I think about some of the credit markets, cash flow levels are not that enticing anymore. All these things start to add up and say, by the way, I still think equities are going higher, and they've been incredibly resilient through this period. I still think equities can go a bit higher, but there's a lot of things that exactly as you described that are flashing on the dashboard that say, maybe we reduce it a bit.
Rick, this is a really interesting time, and I'm surprised to hear you saying these words, so I'm processing it along with my audience as you talk about what you're doing in this market at the moment. Going forward then, can you have help me just get a better understanding of the game plan for the next couple of months? Because you're doing this before we see the 500,000 print, the 1 million print in payrolls that we might see over the next couple of months. You're doing this before we see that push higher in inflation print as well. What is the game plan for the next couple of months when we start to see that data come through?
So a couple of things. It was a little irritating to mention because I do use dashboards for this. I'm not sure if we get up enough, but anyway, we do look at it. So, part of what we do in these dashboards is we try and forecast where things are moving. And quite frankly, markets have anticipated that you're going to see some pretty significant growth. You could get a big payroll print this week. You could get a big ISM number print this week. I think you will get a strong number this week. And the markets have started to price in that growth. Listen, I think that growth, I think it's going to be much higher than the people have said. I think maybe there's more economists moving those numbers up, but I still think you're going to get high sevens. I think you can even eclipse that from a growth point of view. The markets have started to price that in. And so, our job today is to think about, the S&P 500 pressing 4,000. I don't know, not as exciting as the last few months I've been on with you. So, while the growth, I think, is to be tremendous, will lift corporate earnings, will lift corporate top line revenue. And, tax is going to adjust, corporate tax is going to adjust, personal tax is going to adjust. There's a series of things that, that cause you to say, maybe I need to recalibrate a little bit.
We are here in Omaha, Nebraska this morning with Warren Buffett, the chairman and CEO of Berkshire Hathaway. He's just released his 55th annual shareholder.
It's Tuesday, March 30th. This is the Street Live. I'm Catherine Ross, being joined by Jim Cramer. Jim, what are you watching in the markets today? We are seeing all three down in the red.
I'm not as negative as what's on your screen. And the reason why I'm not as negative is I continue to believe that we are having very good, disagree with the CDC on this, we're having a very good vaccination rollout. Okay, so I don't want to lose sight of the fact, as I did, mention real money, that there are stocks that are going to work, and not everything should be thrown out. Also, interest rates went very high when I got out this spring, and now they are receding, which is something that has worked for the market. So I would urge people, and this is something I kind of want to do, like let's say if I didn't own, let's look at Eli Lilly. Okay, at one point Eli Lilly was down $1.50. And it was at 184, and it was so tempting. I just didn't get down there in time. So I say scrutinize the market and look for something you really like, particularly in the NASDAQ, which is just every day down, and that's kind of unrealistic. I mean, I saw Broadcom. Broadcom's down 18. Broadcom's sold out. You can't get any of their chips. That's an interesting opportunity to me. So what I'm saying is look for opportunity, particularly in the NASDAQ, because interest rates may actually be more tame than people realize, and also because I like to buy markets that are down, and we certainly have one that's down.
Well, and Jim, one of the main stories driving the market news this week is really this Archego story, and you've been focusing on this and ensuring that investors understand the market call situation. Now, this put pressure on banks Monday, and Jim, you noted in Real Money yesterday evening that this market is always robbing Peter to pay Paul.
Right. Well, by the way, JP Morgan turned out to have no exposure at all, which shows you that they turned down what everybody else wanted. They went long-term greedy. Long-term greedy is right. When it comes to this market, there never seems to be enough money to be able to make it so two groups go up at once. And the classic example I'm looking at is Costco, okay? So Costco is down 3. And at the same time, you've got Target up 2. I mean, this is that same thing where, Costco is being, it's essential, which we therefore think is important, and then we think it's unessential, non-essential. And the stock that I've been focused on that makes it so that you can, I can talk about the people close, those were. We ought to be looking at Walmart here. I mean, Walmart is showing its true colors. That it could be both open and closed. And what I was talking about this morning was one you know are gonna do well when the economy's open, and know are gonna do well when it's closed. And I think that one of the things that's happened, balance sheet's really good, no bankruptcies to speak of that we saw in the papers today, housing prices at a all-time high, tremendous demand for housing. All that adds up to Home Depot and Lowe's, and I particularly like Lowe's. Now we can, for action alerts, we really own Costco and Walmart and Lowe's. I think that's overdoing it, but I would urge people to take a very hard look at those. And by the way, we're also having this weird thing once again where Caterpillar's up, Nucor's up, because that's a belief that the infrastructure is going to happen. So the infrastructure bill's front and center, cost of freight up front and center, that's FedEx and UPS. The plane demand front and center, although Boeing's been coming down all morning. And then what I like is this anything involving housing. I think it really matters.
So let's recap that, Jim. So you like some housing, you like Lowe's and Home Depot, you like Walmart, do you like Target and Costco also? Is it both reopening and
I like Costco. Target is 200. I mean, people, I have not liked Target as much as I should. You know, I was wrong. I thought the last quarter wasn't that good. Target's going to be at its all-time high. And it's all the 22 times earnings. It's really not that bad. Target works for me. But I'm just saying that it's like, you know, can you really just one day hate Costco, one day love Costco? It is tiresome the way this market tends to react. I mean, that's why I say Peter and Paul, it keeps switching. It loves to hate. I mean, today we get McCormick and we got, okay, Discovery and Viacom. Well, you know what? Those were hit because
저는 영상 보면 항상 좋아요 눌러요. 유튜브 영상 보면 항상 좋아요 누릅니다. 싫은 걸 안 보고.
And you know, those were ones that they didn't want yesterday. So today they want casinos. I find it unnerving. I want this market to have a lasting theme, and it can't get it. Remember, yesterday was FANG. Everybody liked FANG. Well, now everybody hates FANG. Give me a break. It doesn't work like that. But this market is like that. So what do you do? Okay, so Abbott's down $1.80. I don't know. That's a good opportunity to get that. I mean, if you are trying to figure out what to do, GM and Ford are doing incredibly well. You get into those. I mean, so I'm constantly looking at what people are doing, but I tend to be circumspect about the idea that this market can launch any big advance when one day it loves Shopify and the next day it hates Shopify.
Jim, one thing that's unnerving me is this oversupply in the market, and you focused on this last night on Mad Money. So I have to ask you, how can investors spot this oversupply, and what should they be doing about it?
It's right, it's front and center. We know that Renaissance Capital said that this first quarter was the most offering since 2000. So immediately, what does that say? Well, so most offerings since 2000, and you have to be wary of what happened in 2000 because it was a disaster, and it was because there was a lot of lack of merchandise that was very bad. Now, the merchandise that's being offered now is bad, but I would be very careful because when you have this many offerings, you better have a lot of money coming into the market. And what you're always hoping, and again, I want to present myself, I don't want to present myself as negative. I'm just saying, I'm very neutral. I'm neutral because the supply is bad, but the opening of America is going to be very positive. And in the meantime, interest rates are bid to bid, and rates are coming back down after being up big, which is then allowing the Nasdaq to move. I just want to make it clear to everybody, I am neither positive nor negative. I am opportunistic. And do I want to buy Nucor off of infrastructure? Yeah, I'll do that.
네, 여러분들 저기 보시죠? 이렇게 될 수 있어요. 라이트 이어. 잠깐만. 라이트 이어.
Because the head of the CDC basically presented an apocalyptic scenario impending.
아,
Those
충돌 주문에 좋은 운동.
I think many of those people who heard this were quizzical.
케이블로요 이렇게.
I gotta get it out. Right, let's go buy some more. Let's go buy more.
그다음에 이거.
But it was frightening.
T
What I don't like about this market
A
was the fright
그다음에
was immediately reflected in a wholesale
Y
switch towards stocks
그다음에
that
이렇게
poorly
scapular
when the
retraction.
economy opens. And I don't
충돌
like the
증후군의
level of
최악의 운동을 알려드릴게요.
So,
Up,
I
right,
encourage
row.
people to be a little more cautious
그
because
다음에
the is overwhelming.
랩을 다운 뒤로 당기는 거.
I do like Walmart right
그러니까
now, but then
여러분
again, I'm
주짓수가
not
이거 팔 이렇게
so,
이렇게 꺾는 거 있죠.
we are
업라이트 로우가
where
이렇게
we have
꺾는 동작이에요.
sales stock.
그래서
I'm almost
충돌 증후군의 최악의 운동은 up, right, row.
Those are,
그다음에
ones that are
랩을 다운 뒤로 당기는 거.
and today they're
그리고
taking a breather
또
because
뭐야?
I think interest rates could actually end up falling.
웬만하면 딥스하지 마세요. 네.
Circumspect of high priced sales stocks and kind of like the stocks that are low priced earnings.
So I want to circle back to the name that you mentioned previously, and that's McCormick, which is also your mad dash. And stock you mentioned investors lost because of what
어깨
you talked
충돌
about.
증후군에
In your words, Jim, I think they were apt apocalyptic warning. Why is McCormick a stock that can kind of tell us where we are in this pandemic?
Well, if we're apocalyptic, that means we stay at home. If you stay at home, that means you cook at home. Now, McCormick has another business that we were kind of hoping we'd get better, which is this business that involves service, like at your cafeteria at the office. McCormick is trying to make a move. I think had the CDC director not talked about impending doom, I don't know how well McCormick would really have done. Now, they did guide up, but they guided up last time, and people didn't like it because people were thinking, well, the vaccine, at that point, last time they reported, you started thinking about the vaccine and how powerfully different the country could be. Now it's going up. It's not that far from its high. It's encouraging people to buy other stocks of similar ilk. I come back and say, let's watch McCormick. Might tell us how much people believe in the reopening thesis. And the reopening thesis, McCormick goes down. I don't know.
Yeah, and today it's up, Jim. I mean, it's up 4% to $93 a share. So it sounds like you're saying it's at $93 right now.
No, I'm saying it was a great quarter. It's a great
Oh,
quarter.
yeah. No, and Jim, that, to me, I'm wondering, it sounds like you're saying hold off on buying right now, correct? Or hold off on selling too.
Yeah, well, I want stocks that are down. If I could find a stock that's down. I mean, if you take a look, like we bought Union Pacific when it went to 206. I mean, that's what I'm looking at, okay? Advanced Micro down $1.70. Now, Advanced Micro has been trashed and trashed and trashed. It is now down 24. Well, I like Advanced Micro forever. And I think Advanced Micro is very, very interesting. I think Google, there was a note about Google today about how business is roaring back, and that stock's down $1, down a couple. I like that. Louis about to turn positive. I want to buy stocks that are down.
딥스 업 라이트로
Millennials or Gen X, whoever the hell they are, they like to buy stocks that are up.
하지 마세요.
And I think that that's not working as well.
웬만-
I did a-
업라이트로는
that the man is back, so to speak, that
진짜 해가 그건 아예 안 해야 되는 운동이에요.
has no appetite for a lot of these
업라이트로는 아예
We did read an article
안 해야 되는 운동입니다.
where it talked about how the younger investors had 5 times what
정하시고 싶으면 덤벨을 사용해서 이렇게 하세요. 이렇게. 이 상태가 아니라 이렇게 하세요. 덤벨 들고 이렇게. 오케이?
choosing what they like and reacting to research and not always believing that the stocks are going to go higher. So that is a big change in what we saw. And I want to warn people that the family band names that these younger people had are not working. The SPACs are not working. And ultimately, the only one that is working oddly, working aggressively, is GameStop. And I think GameStop keeps adding really good people, causing me to wonder whether they don't have something very positive going on that I don't know about.
Jim, I want to talk about Tesla because Elon Musk did caution that a shortage in battery cell supply could impact Tesla's ability to scale production of Tesla semi-truck. If it's not going to impact other Tesla cars, Jim, is this actually concerning to you?
Well, Tesla's priced for perfection. Tesla's part of this cohort that I'm not sure is right and to own. And the best way to find these cohorts is to look at what Kathy Williams, I follow all her ETFs. And the ETFs are very long-term oriented. They're moving up, they're not down, except for the new one, ARKG. And you want to watch those because those are barometers of what the lending is doing. I said this morning that to abandon them is to think short term, and I don't think you want to shoot short term. I think you want to shoot. You obviously want to shoot for longer. And those funds rolled down about 5% this morning, and they're coming back. What's not coming back, by the way, is Apple. And the reason why Apple's not coming back is that there are many stories out there which just say that the quarter's going to be bad and hurt by components. And I mention that because the component shortage is what's hurting Tesla. The component shortage was hurting Apple.
Jim, I think you just read my mind, because right as you said that, I was literally thinking, okay, I want to hit on this Apple story, because for the investors who haven't seen this, Foxconn, Apple's biggest supplier, did caution about material shortage. Based on what you just said, Jim, do you think that if Apple stays down, because I know that this is your own and don't trade it stock, do you think that this is a buying opportunity?
I think Apple goes lower. I think it goes lower because the numbers may be too high. But the reason why those who follow me have had such an incredible return to Apple is that I have often said, look, I think the stock's going to go down. There are things that are not great right now, but you got to take a longer term view. And I find you could have done that for Target, you could have done that for, there's a whole Caterpillar, for Gear.
이 사람이 맨날 얘기하는 거 반대로 듣는데 애플 주식 내려간다 보니까 올라가겠네.
And truly, urging people to say that you can't, you're probably not nimble enough to get out and get in. Like I look at Apple.
저 사람은 해치펀드 되게 유명한데, 아니 해치펀드가 아니라
Would you be able to get
미국에서
109? I don't know. I'm probably just 109 scared to death. So what I
저렇게 유명한 사람도
let's think a little longer term about it.
미국 주가 지수 S&P 500보다 저 사람 수익률 떨어져요.
Franchise. You can buy a little bit, and then wait till it's lower. But I'm not trading because to trade it is to have some sort of incredible power over the future that I just don't have.
And Jim, I want to ask you, what do you want to see from the jobs report that we're getting on Friday?
I'd like to see lower. I'd like to see wage. Even though I don't want this for workers, wages stable because if we have wage inflation coupled with all the other kinds of inflation we have, then I think that interest rates are going to spike, and that's going to cause a lot of people to lose a lot of money.
All right, that's it.
Keep some cash on hand.
All right, that's your advice for the day, guys. Okay, Jim, we're gonna head on over to our actual let's get to actually, there's a lot of topics I want to hit on, especially FANG, which you mentioned briefly in this show. So let's head on over there. You can find us at actualalertsplus.com. I'm Catherine Ross. We'll see you tomorrow. It's Monday, March 29th. This is Street Live.
How can this market get out of that bizarre maze where the reopening stocks keep roaring and everything else, especially tech and healthcare, gets left behind? If the day when the Dow declined 104 points, that's 2%. The Nasdaq actually did a little bit better, edged down 0.11%, but still headed for the worst month since October. Let me tell you what needs to happen. I've got the solution, all right? And it's a little complex, but I'll give it to you. First, there is way too much speculation this morning. We're still seeing lots of money pouring into areas that are very hard to value. Just look at the crawl at the bottom. I mean, you see this right down here. I mean, see right below it, okay? Look at this. I'm not saying those companies are worthless, but the amount of buying that changes hands every day in that low dollar stock, and that low dollar stock, and that low dollar stock, that should make you, look at that one, should make you very nervous. It's a sign of excessive speculation. With the And face it, these are the moral equivalent of penny stocks, for heaven's sake. See, too much greed. Yeah, one look at the newly launched ARC Space Exploration ETF tells you everything you need to know about how managers can't resist creating new funds, even if there's no reason for them to exist. They love to create ETFs. They love to advertise ETFs. Now look, should this fund have some quality companies that can pass as space plays? They've got Trimble, Kratos Defense, L3 Harris. Now something like L3 is mainly a high defense contractor. We have one. You got Lockheed Martin and Boeing, which do have some space exposure, even if it's not their main business. The thing is, this fund also includes Amazon, Alphabet, and Netflix, along with some Chinese e-commerce places, JD.com, Alibaba, Tencent. Deere's in there too. Yeah, Deere, the tractor company. It's ridiculous. But there are enough genuine space-related stocks to make a decent ETF, and imagine what's like that 0.75% expense ratio. Maybe, I have an idea, don't launch a space ETF if you have to pad it out with Netflix and Deere. You know what, I was surprised that GameStop isn't in it, because GameStop is synonymous with rocket ships over Wall Street bets. You know, it's not disorder. Well, at the ridiculous amount of risk the banks expose themselves to with this Archegos hedge fund, you know what that's about? That's about greed. The industry might have lost $10 billion here, and we know they were avoidable. Why? Because this fund did not ensnare everybody. JP Morgan considered working with them and passed. They exercised something I've been searching for this word all day because it's not really available anymore on Wall Street. Judgment. Something it isn't very short supply. And they decided this fund wasn't worth the risk. They didn't trust Archegos. They didn't trust it. Everyone else used those commissions from Missouri, Credit Suisse getting particularly hard because they were so desperate to show that they're the go-to banks for hedge funds that need absurd amounts of leverage.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.
So let's talk about this new space exploration ETF. What was the methodology? What went into the choice for those 39 components that comprise it?
Sure. So the way that we're looking at the space ecosystem broadly is in 4 different categories, really. So you have orbital aerospace and suborbital aerospace, and I think those are pretty familiar to people with rocket launches, satellite constellations, space tourism, potentially hypersonic point-to-point travel down the line. And then 2 other components that are equally important are the key enablers. And so 3D printing is a huge component here. You got energy storage enabling air taxis and drones. You have robotics and deep learning for reusable rockets. And then the beneficiaries as well. And then I think that's just as important. Space is already an invisible backbone to our economy, and we think that's only going to become more so as constellations launch.
Yeah, let's dig into that a little bit more. I mean, because we do have 7 SPACs that are focused on space that are poised to merge and see those space start trading publicly. I notice you do have a SPAC in here. That's the Atlas Crest investment SPAC, which is merging with Archer. So we're talking flying taxis, but you don't have any of those space names. Why not?
Yeah, so we're constantly evaluating all of these companies. And I think with SPACs, it's important to remember, a lot of these are almost at the pre-IPO stage. And we do our research, and so we really want to be sure that we're picking the winners along the track, particularly in aerospace, where many companies do go bust and things get delayed. So we are really doing everything we can to make sure that all of our investment decisions are backed by research.
Okay, so break this down for me, because I think there were a lot of folks, myself included, that were surprised to see names like, for example, Netflix or Deere or some of the Chinese internet companies in here as well.
Yeah, I'm sure we've all seen the memes going around on Twitter, and some of
Yeah,
what
long
we're
trip to Mars. You're gonna need something to watch.
Exactly. Long trip to Mars, tractors on Mars. But the fact that people are dismissing that is very reassuring to us, and it kind of demonstrates the type of research that we're doing and how we can be uniquely correct and generate some alpha from these things. And so if you look at something like Netflix, that has 200 million paying subscribers. In the US alone, there's over 40 million people who don't have access to broadband. And so if a satellite solution can bring access to those customers and expand the addressable market and the top line for Netflix, then this is something that's very important. And we don't think other people are doing this research. And I would say that kind of highlights the art ecosystem in general, where we have analysts who are working on next generation internet. My partner analyst, Tasha Keeney, very focused on 3D printing. And all of these names are so complex with space, and they're touching on so many different technologies to make it happen, that we can all collaborate and really model these things in a way that most people can't.
So just to wrap all of this up, Sam, we heard those comments at the beginning of the segment from Michael Colglazier over at Virgin Galactic. Space is hard, timelines tend to slip. I realize ARC does tend to have a much more long-term investing horizon and thesis in general with its different ETFs. How are you approaching it? How are you thinking about it in terms of fruition? When we do see some of these major space exploration moments actually happen?
Definitely. So what we're seeing, pretty much the same as our other ETFs. We're looking at this as a long time horizon, and we'll use those temporary moments of volatility to our advantage. And so we really like when that happens, because it gives us the opportunity to really consolidate into our names with the highest conviction. And as you said, with space, there's some huge opportunities. We're not just disrupting some legacy businesses like satellite radio, satellite TV, and expanding those. We're creating whole new markets. As we mentioned earlier, air taxis. This is a whole new opportunity that could be hundreds of billions of dollars.
Shepard Smith here. Thanks for watching CNBC on YouTube.
Welcome to ETF Edge, your go-to place for everything exchange traded funds. I am Dominic Chu, filling in for Bob Bassani today. China investors are facing no shortage of headaches these days. Chinese tech giants were rocked by a bevy of bad news just last week. Primarily, a massive liquidation by hedge fund Archegos Capital, but also concerns over regulatory risk right here in the United States. The Crane shares CSI China Internet ETF.
뜯어질라 그래, 이게.
Web as it's known, took a serious
엊그저께 실어고 무겁게 했다가 이게 뜯어질라 그래.
They stunned investors in November by nixing Ant Group's IPO at the very last minute, and officials have repeatedly expressed concerns about inflated stock prices and excessive leverage in the financial system. So, what kind of impact should we expect on Chinese ETFs from all of this? Let's ask Brendan Aher, CIO of Crane Shares. He runs that KWEB, Web as it's known. Also with us today is Tom Lydon, the CEO of ETF Trends, and Dave Mazza, head of product over at Direction Investments. Gentlemen, thank you all very much for being here. I would like to start with Brendan if possible, because your ETF is possibly tracking the epicenter of a lot of this last week's moves. What exactly can you tell us about what's happening with these Chinese internet names, and how is it translating into your ETF?
Yeah, thanks for the opportunity, Dom. I think we are in a bit of a rotation from the growth orientation, the work from home stock, to a little bit of more of a balanced exposure where you're seeing some of the reopening trades, the cyclical value stocks come back. And I think you have an element of some of these regulatory concerns, U.S., China, this situation with this hedge fund liquidation that was in a lot of these names. And it's all led to a pretty nasty downturn at the same time that we're basically flat year to date. Since the end of 2018, we're up 100% since inception. We're up 280%, beating the S&P 500, and I think as medium to long-term investors, we just have to swallow some of this volatility, as painful and emotionally draining as it is.
We know, Brendan, if I could follow up here, the mechanics of exchange-traded funds are different than that, say, of mutual funds and separately managed accounts. We know that there's intraday price action that's happening with this KWEB ETF and all of the stocks that underlie it, most of which translates into trading that happens overseas. How exactly has your logistical infrastructure been perhaps taxed because of what's happening with this particular liquidation at Archegos Capital?
Well, I think we've come through it. This is another example of where exchange-traded funds are tested by market conditions. And in the case of KWEB, we had an exceptionally high trading day on Friday, 13.5 million shares, 2x the all-time highest trading volume. And we came through it totally unscathed. That a lot of these U.S. names do have dual listings in Hong Kong that allows for pricing to take place during U.S. trading hours. And again, I think this is just another example of how innovative the ETF structure is. 13.5 million shares in KWEB on Friday, and absolutely no issue.
Now, Tom Lydon, I'll turn to you here. We're showing a graphic right now with some of the big holdings in this KWEB ETF. From your perspective, has the ETF industry as a whole, the infrastructure, so to speak, that makes the wheels kind of turn in the ETF industry, have they really been that tested given what we've been seeing, or is this one of those situations where this is a blip on the radar longer term and we're just going to have to get over in the next few weeks?
Well, there have been a lot of eyes on the Chinese market, Tom, for sure, and it's held up pretty well, as Brendan said. A lot of volume. On top of everything that happened last week, where it was kind of the perfect storm for Chinese stocks, we've seen that Chinese stocks have gone below major trend lines, 200-day average, 50-day average, which is going to accelerate the trading. It does not stall or halt trading in any way. And a lot of these stocks that you point out are actually traded on U.S. exchanges as well. So far, everything's held up really, really well. I think some of the key things to think about as investors are long term, are these companies going to be here 5 and 10 years from now? And I'd say, yeah, there's definitely pressure between the U.S., where we're going to be looking at accounting standards and making sure with the new SEC commissioner coming in that some of these companies might have to open up their books a little bit more and adhere to what's going on. There's also scrutiny over in China, for sure, where, as you pointed out, Jack Ma was kind of silenced and put on, let's say, double secret probation and put on the sidelines to not talk as much as he normally does. But the bottom line is these are great companies, some of the best companies in the world, and will continue to prosper in the years to come.
So Dave, I'll turn to you here. I mean, the idea that these ETFs can operate relatively smoothly in this kind of environment maybe speaks to some of the developments that we've seen in the ETF industry over the last several years, a lot of mistakes that have been learned from. What exactly, in your mind, has been the biggest kind of lesson that we've seen so far early in the stages of this liquidation tied to Archegos?
One of the key lessons here is that ETFs are often where the finger point happens. But really, in this case, we're not seeing it. And in fact, to Brendan and Tom's earlier point, ETFs, particularly those focused and owning a large portion of the names that were owned by the fund and were forced to have lockdown, has performed markedly well, even with an increase in trading volume. So as ETFs have become more mainstream, they're now being used as tools for both long-term investors and shorter-term investors to get in and out of positions relatively quickly. And as you can see, is that certainly we have been in a bit of a stock picker's market in 2020 and maybe to some extent in the early part of 2021. But as
Well, stocks are set to wrap up a rocky March. Today is the final day of the month and the quarter. The Dow, the big winner, up nearly 7%. Many of you rotate out of so-called growth stocks, technology, work from home, whatever you want to call it. And in into more cyclical and so-called reopening plays. The NASDAQ up nearly 4% on the month, while which market fell? The S&P up 4%. My bad, early. The NASDAQ down more than 1%. Here you go. Well, bonds a big part of the story. The 10-year Treasury yield hitting a 14-month high of 1.77%. Right now it's slightly below that level. All right, quick trip around the globe. Take about 30 seconds. You got fractional losses across Asia. The Nikkei down the most, but still under 1%. Similar story in Europe. More red on the screen than green, but the losses are pretty minimized, just a couple of tenths of 1% for their major markets. All right, new this morning. More on President Biden's official rollout of his massive infrastructure spending plan coming later on today, as well as some growing new concerns about the tax hikes that might come with it. Cruz has warned that in this morning's top headlines, and she is with us now. Brenda, good morning.
Good morning, Brian. The president is heading to Pittsburgh today to unveil the first in a two-part economic recovery proposal. That first portion is expected to overhaul this country's infrastructure and manufacturing systems, while the second part of the plan will involve big investments in health and child care. To pay for the likely multi-trillion-dollar price tag, President Biden is expected to push to raise the corporate tax rate from 21% to 28%, and force multinational corporations to pay significantly higher taxes to the U.S. on
더워.
profits they earn overseas.
더워. 왜 이렇게 더워? 이 병원 빌딩이라 엄청 덥게 해놨어요.
Now upping its estimates for total losses by banks at the center of it all from 2 to 5 billion to 5 to 10 billion, calling those losses very material. Meantime, Reuters is reporting that U.S. and British regulators have been in discussions with market players to determine the full extent of the fallout from the default on Archegos' equity swap position. And ballot reviews will continue today at that union election at Amazon's warehouse in Alabama. The process of going through the ballot sent to the more than 58,000 workers at the facility is expected to take days and likely spark legal challenges. Ahead of that vote, Amazon had been discouraging efforts by the retail, wholesale, and department store union to become the first ever to organize one of the retail giant's facilities in the U.S. It's going to be one to watch, Brian.
Yeah, it certainly will be, Bertha Coombs, as well as those sizable losses when the Archegos trade's gone bad. Bertha, thank you very much. All right, well, many start to worry about the bad news of potentially higher taxes. Here are some good news about the macroeconomy. And this one comes courtesy of the New York Federal Reserve, and it's little talked about weekly economic indicators, or as we call it, WEI, because we're friends. It's an index of 10 different daily or weekly economic, indicators like electricity output, steel production, fuel cells, and even a consumer survey. And the latest numbers are out, and they are booming. That weekly WEI coming in over 4%. That's that big spike on the right side of your screen. That's one of the biggest jumps in readings ever. As big or bigger than the best week coming out of the financial crisis. A very good economic sign, all in all. So can an economy clearly on the upswing overcome concerns about higher rates, inflation, and potentially higher taxes? Well, let's bring in now Catherine Faddis, founder and CEO of Grace Capital. Catherine, good morning. It's good to see you. Obviously, listen, there's no doubt the economy is on the upswing. Stocks have responded. I guess the big question is, how much of the stock move the last 6 to 9 months is pricing in the kind of economic moves we're starting to see now?
Good morning, Brian. Thank you for having me. I will argue that it's pricing in a lot of it. But look, the market has been stretched for years. Okay, the market was up in 2019, 30%, 2020, 18%. This is with the pandemic and all the things going on. So growth stocks, value stocks, the market is not low.
Not, okay. Very nice choice of words. Not low. Does that mean too high or kind of like the middle porridge, Catherine?
Well, my crystal ball broke by the way here. I would argue that this for a while, and it just seems to keep going up. Look what happened with IPOs. It's been very healthy, even with a little bit of a NASDAQ meltdown the past few weeks. Still had very healthy IPO. So there's a lot going on.
All right, we have by the way, Catherine, throw this out there. We have a quarterly survey at CNBC where we like to, survey contributor strategists, folks like yourself that are running money, and we ask them what the most crowded trade might be in the markets. 41% said Bitcoin, 32% said big tech. Obviously, the numbers don't add up to 100. 21 cyclicals and 6% small caps. Would you agree? I mean, big tech, Bitcoin, just, I don't know, most crowded means just crowded, but there you go.
I would agree with Bitcoin, no question. Big tech, I am not sure about. I think to say that the overall market is high. Big tech at least has growth characteristics. These are, we're using more and more technology. Everything you use, you have to go in and pay Silicon Valley their little tax. Okay, I'm talking getting on Google, using your phone, the cloud, everything. Everyone working remotely, you're using big tech. So at the very least, I think big tech, you're seeing growth to go with it. The rest of the market, materials, financials, energy, I'm not so sure.
All right, Catherine, I want to ask you about the big market story the last few days, Archegos. And I'm only asking because the little birdie, i.e. my notes on the interview, tell me that you and your fund own Discovery. Obviously, Friday, not a good day for you. Your take on the macro situation, and maybe, are you buying Discovery on the weakness of 27% drop in one day on Friday?
We added a little bit to the Discovery position. Again, the backdrop is, it was brutal what happened on Friday. It was absolutely, did not really know what was going on. There was no news. You're calling the company saying what is going on. Same thing happened with Viacom. Eventually you find out it's the Archegos. That's a nightmare. I mean, I don't know where else it's legal to put 8 different mortgages on the same house. That's what we have in the swaps market. Investors got nailed on it. Nomura, it looks like Nomura is going to lose half of their year's profits from this. Credit Suisse, Goldman Sachs. So it's been a disaster.
I think that's well said. 8 different mortgages on the same house, which, by the way, people used to do, but now you're talking in the swaps market on stocks. We're always doomed to make the same mistakes, at least kind of similar ones, if not exactly the same. Catherine Faddis, Crest Capital, real pleasure to have you on. Have a great day. Talk to you soon.
Thank you.
You're welcome. All right, when we come back here on Worldwide Exchange, because we are just getting going, your morning's big money movers and what has investors howling shares of Chewy. Plus, just who are all these new retail traders who come rocking and rolling into the stock market? You knows. Caleb Silver here to peel back the curtain on the next generation. Then, Boeing's rebound continuing to take off as it finalizes another sale of its planes. All in all, a very busy hour. Worldwide Exchange rolls on right after this.
Oh.
Welcome back. Seems like a good time to hit three of your big money stock movers right now. Let's call this a spaghetti western trio of stocks. It is the good, the bad. Stock number one, Chewy, the pet company rallying, reporting its first quarterly profit and more than $2 billion in sales. Chewy benefiting from the boost in online shopping and pet ownership during the pandemic. It added nearly 6 million customers last year. Stock number two, Lululemon. Stretchy pants sales, rock solid. Fourth quarter results beating forecasts. The retail projecting first quarter results above analyst estimates. It is warning about more potential supply chain issues. For all the container storage, there you go. And stock number three, BlackBerry. Yep, BlackBerry. Revenue missing estimates, even as the company says sales of its car software are improving. BlackBerry, of course, one of the meme stocks caught up in the Reddit trading frenzy earlier this year. Down about 5.5% today, but they're still nicely on the year, up 30%. All right, take a short break. When we come back, one major music festival may have a solution in the pandemic era. What it may take to see some of your favorite bands in person. strategies also done in the markets. Caleb Silver is editor-in-chief of Investopedia, and he joins us now. Caleb, good to see you again. You guys digging in. We've got to get this image of who these people are, sort of maybe the 27-year-old, quick talking, fast moving behind a computer screen. But is that right? Who are all these new retailers?
Not surprised, that's Brian. Nephew home from college playing video games, trading stocks in the basement, yelling at your sister for more meatloaf. These are folks largely in Gen X and a little bit older who have been putting money to work for the last year and teaching themselves how to trade stocks. We were surprised by that. As you know, we've been surveying our audience all year about what they're doing, how they're feeling, what they're buying, their sentiment. We wanted to find out who this new crop was because we know millions of traders came into the market. A lot of these folks are our age, middle age, a little bit older. A lot of them are trading stocks for the first time. They're self-taught and they're trading pretty frequently, Brian. It was very surprising to us.
This is amazing too because I was actually digging into it. This is off topic, Caleb, but related to student loan debt and who really owes the most money because we picture this as a young person's story. Every time we do a story on student loan debt, we show like a 24-year-old. The majority of debt, the biggest chunks are owned by geezers like us, like a 42, 45-year-old person, probably with an advanced degree. That's who owns the biggest slices of debt. It looks like these retail traders, heck, maybe they're some of the same people. We've got to stop referring to them sort of as the newbies. They might not be that new. They might just be the guys that got out 10 years ago that are jumping back in.
Right, men and women, and they're jumping back in, investing sometimes for the first time, and teaching themselves by and large. A lot of these folks were self-taught. 75% said they were self-taught. A lot of them said they've learned some money from websites. Thank you, Steve. Thank you, Investopedia. A lot of them are learning themselves. So this is not necessarily a Reddit teach me how to trade crowd. These are folks who are trying to educate themselves, do it themselves. Maybe they're out of work. Maybe they have time on their hands the past year during the pandemic. But they brought themselves in and they're teaching themselves to trade. And they're turning over their portfolios pretty frequently, which means they're trading frequently. Although it doesn't look like they're risking too much money. And a lot of them Ryan said that they've done pretty well.
How well? How much they've made or lost?
Sure, we asked them how much have you made, have you up this year, are you down this year? About 85% said that they were up this year. Now, of course, everybody likes to brag, so we don't know that for sure. We're not looking into their portfolios, but this is an honest crowd. The Investopedia readers, they come to us to learn. And they've been with us all year, so a lot of them say that over the year, but they're not risking that much money. A lot of them are risking $50,000 in a portfolio. The trades that they're making are frequent, but they're only trading stocks here and there. And their favorites, Brian, even though they might be an older crowd, are still some of the meme stocks, if you believe it.
Oh yeah, they're so honest. Like when the doctor asks you, Mr. Silver, how many glasses of wine do you have a week? 2 at most, maybe. Let's talk about the stocks they like to run. Maybe that's just my answer. Let's talk about the stocks they like. Is it still all about Tesla and GameStop?
Sure, those are their two favorite things. So you have some regret about Tesla not buying it in 2020, or not buying it frequently enough in 2020 on the dips. GameStop, obviously, because the gains were so intense, it was so volatile, it was an easy trade to get in and out of, but not an easy one to make money on. But they're also, and this is consistent with what we've heard all year from our larger audience, they like the big mega cap tech stocks. They think that Tesla, Amazon, and Apple have the best prospects this year. Of course, those three stocks had their troubles in 2021, but these are folks new to the market. They know the big names. They know the big names that are out there on CNBC that they read about on our site too, and they're sticking with those.
Yeah, great stuff. Brian, Jim, I love me. Caleb, you and I are Gen Xers. We're like the smallest generation in history. I like we're getting some play. Some of these are finally a little forgotten. Gen X stuck in the middle. Nobody cares. Caleb Silver, you care. We care that you're on. Thank you very much. Have a great day.
Thank you, Brian.
Me too. I care. All right. Let's get down to some of the headlines outside of the world of money and business. NBC's Philip Menace in New York with Warren. Philip, good morning.
I do care, Brian. Good morning. Republican Florida Congressman and ardent Trump supporter Matt Gaetz is denying an explosive report in the New York Times. It says the Justice Department is investigating him over, quote, whether he had a sexual relationship with a 17-year-old and paid for her to travel with him. The article goes on to say the investigation was opened in the final months of the Trump administration under Attorney General William Barr. Well, last night, during an interview with Tucker Carlson, Gaetz denied those accusations while calling
York Times is running a story that I have traveled with a 17-year-old woman, and that is verifiably false. People can look at my travel records and see that that is not the case. What is happening is an extortion of me and my family involving a former Department of Justice official. The FBI and the Department of Justice were so concerned about this attempted extortion of a member of Congress that they asked my dad to wear a wire, which he did with the former Department of Justice official. Tonight I am demanding that the Department of Justice and the FBI release the audio recordings that were made under their supervision and at their direction, which will prove my innocence.
No charges have been brought against Congressman Gates, and the Justice Department has no right to comment. New York State is giving the green light to legalizing marijuana. Lawmakers in the State House and Senate jointly passed that legislation yesterday. In a statement overnight, Governor Andrew Cuomo said that he's looking forward to signing the bill into law. Legal sales could follow as early as next year for adults 21 and up. The state is expecting this to bring in a lot of green, up to $350 million a year in tax revenue. Finally, Tampa Bay's celebration of its second Super Bowl still hasn't stopped. Bucs head coach Bruce Arians has permanently commemorated his team's victory with a tattoo. He said he would get inked in when his Buccaneers won the Super Bowl, and true to his word, there it is. It's got the Buccaneers logo, the final score of the game, and of course that coveted Lombardi trophy that he hoisted up last month in their home stadium. Brian, it's something you can only kind of get away with if you're a first or second one at the helm. You know, Tom Brady couldn't do that. Like Dennis Rodman, and after all of his.
They're what, 7?
Something
You know,
like
he
that,
should have
yeah.
gotten another tattoo, Philip. Yeah, because you know where Bruce Arians went to college? Virginia Tech. The Virginia Tech Hokies should have got a blue and orange turkey. Yeah. Just
I
like
like
me.
it. I like the colors and the logo. Always have. You know, they had some good players come out of there. Bruce Smith, Michael Vick. He got a good legacy.
Hold on. Well, I can't do it because I'm changing my mic. I've got my Bruce Smith signed jersey right here and a couple posters. I'm going to ship you some maroon and orange, Philip.
I thought you were about to show me I thought you were about to show me a Virginia Tech tattoo for a second somewhere.
Oh my God.
That's where I thought you were going with that. The memorabilia is cool too.
That's
though.
later.
All right, buddy.
Philip Mena, Hokie swag coming your way soon, my friend. Thank you.
All right.
All right, trying to get but I failed. All right, still to come as we round the corner. President Biden wants to build bridges, literally, spend trillions to do it. But will even some blue state reps in Congress go for the higher taxes that have to come with it? And if you have not already, who hasn't? Subscribe to our podcast called Worldwide Exchange. It's on Apple, Spotify, Stitcher, and other apps. And do not miss tonight a CNBC special, CNBC's Race and Opportunity, 8 p.m. Eastern Time, looking at economic and social challenges facing the Asian American community, violence against it, and potential solutions moving forward. Very special tonight at 8 p.m. Do not miss that. We're back on it. fellas, thank you very much for joining us. Get a quick check on the market before we dive into everything else. We are seeing stock futures. Not a big move in either direction. Either up, Dow futures down about 30, Nasdaq futures up 13. That's after a little bit of weakness yesterday, coming off a record high. It's, by the way, final day of the month, final day of the quarter. Been a darn good month for the Dow. Dow's up 9%, one of its better months in a long, long time. A little bit of weakness yesterday, but overall, these cyclical, industrial, big old names, considered boring, they've been doing well. Yields, they're a part of the story. They've been on the move. They're a little lower right now in the 10-year, 174, whatever. But they were up to 177 yesterday. And speaking of yields, we've got another quarterly CNBC survey on what many pros think is going to happen with yields. This one, the 10-year, 62% saying above 2% this year, 38% below 2%, and 0%. They didn't. Maybe surveying our friend Scott Miner says below 1%, 62, 38, 31. Yep, that's 1%. There you go. So 2 out of 3 think below and above 2%. Well, that is where yields are heading. Let's talk about where many of you may be heading, at least when it comes to work and whether or not you're going to be back in an office if you're not already. We're going to focus back now with those headlines and more further.
Yeah, Brian, you don't have to put away the yoga pants quite yet in some firms. JP Morgan, Salesforce, and PricewaterhouseCoopers are reportedly the latest major companies looking to get rid of a big chunks of office spaces. More workers go remote. Now, the Wall Street Journal notes because big firms normally sign long-term office leases, the only option is to try to sublease floors to other tenants. Meantime, Wells Fargo plans to bring people back to the office by September. In a memo, the bank told workers the firm believes, quote, most of us benefit by being physically together. And Alaska Air is buying another 23 737-9 MAX planes from Boeing. News comes just the day after Southwest announced it was buying 100 new MAX jets. They are back, Brian.
Yeah, you know, it's interesting too. We're talking about returning to work. I've got friends of mine in like South Carolina and Texas that never have not gone to the office. Kind of sick. We really forget there's some people, and by the way, there's some people in truckers and medical personnel, they've never missed a day inside their work, which might be in the cab of the tractor trailer truck. Thanks for that. Personal service. All right, now the top story. President Biden said to unveil his plan to overthrow U.S. infrastructure and social capital today. The president traveled to Pittsburgh what he hopes are 2 sweeping new economic recovery proposals. The White House expected to push corporate tax hikes and higher taxes on higher income families to try to cover at least some of the costs. Let's talk more now about this with Jimmy Pepikukas, American Enterprise Institute policy analyst, CNBC contributor. Jimmy, a lot to unpack here. Trillions in new spending, some of it on just roads and bridges, some of it on child care, things like free community college. Does he have the support of even blue staters who, no doubt, house, like New Jersey, a lot of the families that are going to end up paying higher taxes because of this?
Yeah, I think that's a great point to remember. How we pay for this is going to be important. You already have pushback by Democrats who are worried that blue state families, a lot of upper middle class families are there to look for. So this is not going to be like some other pandemic relief bills for Democrats, where basically completely unified in what to do. Just about spending money. We have to start thinking hard on how to pay for it. Some of you we're still going to pay for some of this. But this has become a lot harder, which is why what I've been talking to people, what I'm stressing is that this is going to be harder. It's going to be sort of a bloody political fight, and we should just naturally do all this happens just as President Biden will outline later today.
Well, these are big numbers. I wonder, do we have any idea how they got these numbers? I mean, listen, American infrastructure, we've talked about this for years, Jimmy. I've been talking about this for 20 years. I mean, D- on roads and bridges, potholes, hubcaps, they still make them, flying off cars. It costs more to repair your car than to pay slightly more in gas taxes, but nobody wants to do that. How do we come up with it? $3 trillion? Where did that number come from? Do we know?
Well, my concern with these kind of bills are when the politicians start talking about all the jobs that will create. That's not a contribution to these bills.
some of it. And I know the president's going to talk about, corporate taxes and higher taxes on other people, right? Most people don't make a lot of money, so he's going to say we're going to go after the money. Let's just talk about the money because the money's not there, and that's not my opinion. Let's just go through this. Tax Foundation thinks we'll make about $300 billion in government receipts from corporate taxes. So if you raise it from 21 to 28, 7% jump, let's call 7% jump on 300, so $21 billion more per year in corporate taxes. 3% of American households make more than $400,000. Most of those are not much more than that. They're kind of like in the $500,000 or $600,000 range. So maybe you make, 30 billion more a year, which is a lot of money, but not when you're spending 400 billion more a year. Yeah, that's just the math. Where's the rest come from? Or is it just deficit spending?
Bingo. It's going to be the deficit spending. Yeah, a lot of deficit spending. Listen, this deficit, if we're going to pass anything like that, that's exactly what we're going to do. Even paying partially for this is difficult because Democrats do not want to raise taxes. Frankly, Republicans don't either. They don't want to raise taxes to anyone that can be broadly considered the middle class. And if you were really going to do this, you would probably be raising taxes on those people, whether it's higher gas taxes, some sort of congestion fees, vehicle mileage taxes, a consumption tax. All of those options would raise taxes on a lot more people. And it's also profoundly weird to be worried about we're not investing enough in the United States and then be really fairly sharply raising corporate taxes, at fairly comparison to other rich countries.
Well, listen, middle class tax hikes are going to your point, are going to have to come in some form. Whether they're direct tax increases like, hey, you got to pay more mileage tax, higher gas tax, or just a higher tax at higher cost. I want to get you back on to talk about this very soon, Jimmy, because I love the idea of fixing up our infrastructure as our viewers know. I've been on panels, I've spoken to members of Congress about it. I just wonder if we have the workers to do it. That's another issue for another day.
Point.
Jimmy P.
Point.
Thank you, buddy. Take care.
Best.
All right. Good combo there. But folks, do the numbers. It's not a lot of money out there on the top end. All right, Volkswagen getting a little too excited for April Fool's Day. Details on your top trending stories on Boo Boo on the Volkswagen PR report.
다 했다, 다 했다, 다 했다, 다 했다.
For the CDC's COVID data tracking site, they're available to all of you. Check them out. As you know, on their pre-operating there is all right. As of yesterday, more than 189 million vaccine doses have been delivered.
이 정도 하겠습니다. 120 아니, 110까지만 살짝 부족하다 싶을 정도로 살짝 부족하다. 여러분 제가 지난주에 하는 거랑 이번 주에 하는 거랑 다르죠? 왜냐면 지금 몸 좋아지려고 그래요. 그래서 여러분이 몸이 좋아지려고 그러면 충분히 해야 돼요. 충분히. 지금 몇 시간이야 지금? 1시간 43분 됐는데. 네. 충분히 하시는 게 중요합니다. 아셨죠? 자, 영상이 유용하다 생각하시면 좋아요, 구독, 알람 설정 부탁드리고요. 질문이 있으시면 이 영상 댓글에다가 달아주시면 됩니다. 아시죠? Thanks for watching today. I hope you guys have a great day, great afternoon, great evening. Alright? And then don't forget to like the button. Don't forget to hit the like button. Share with your friends and family. Thank you. Win your day.